All right. So, welcome, guys. This is going to be crypto trading on leverage 101. It's a lot different than your basic just buy and sell meme coin trading, but it leaves a lot of opportunity for like as of recently where the meme market isn't, or the meme space in general isn't that liquid right now. There isn't. It's a little bit harder to find big plays and get in quick. So this allows you to continue trading, and leverage allows you to see a lot of those big gains regardless. Today I'm going to go over just the very basics, how to deposit. I'll show you guys how to deposit. I'll show you guys how to place a trade, and I'm just going to go over some key concepts first so you guys understand that, and then we'll move on to the deposit and stuff like that. So first, concepts to understand. Margin, when referred to in crypto futures on leverage, is the dollar amount in your account or a particular trade. So if you're coming from the stock world or anything like that, you think margin, you think this is the leverage. In this case, on most crypto exchanges, 99% of them, margin will be referred to as the dollar amount in the trade. So if you put in $100 in a trade, it'll show your margin as $100. And then it will show usually at the top screen, like if you're up, it will show, I'm just going to show you guys BTCC, how much free in your account. It'll show that. So I've got this account's empty right now, so it just has nothing. But yeah, just important to know so you don't kind of like make that mental mistake and go, oh my God, am I on, is this margin, or am I at risk of losing more than I have in my account? No. And I'm going to show you guys how to make sure that you don't lose more money than you have in a particular trade as well. So leverage adds to your buying power. If it's your first time using leverage, then this might be like a foreign concept to you to be able to trade. I know there's like leverage ETFs that maybe some of you guys have bought before, where it's just like 2x the move. So just a rule of thumb is if it's 2x leverage, then for every 1% that it goes up or down, you make 2% or lose 2%. So just another higher value too with your buying power, because it's great for small accounts. If a trader has $10,000 with no leverage, they have the same exposure as a trader with $100 at 100x leverage, right? Because that value of 100 times 100 is equal to the 10,000. So imagine yourself putting in 10,000 to BTC, and then it goes up 1%. You're going to make the same amount as that guy would with $100 at 100x leverage. So it allows you to kind of, make a decent amount of money with a small amount of money. It also adds risk though. So if you trade at 10x and you short Bitcoin and it goes up 10% at 10x leverage, you're going to be liquidated, right? So the rule of thumb here is like liquidated is minus 100%, but on most exchanges, your liquidation price won't be exactly minus 100%. It'll probably be closer to the minus 60 to 75% range. So it's always important when you're placing a trade to take a look. When you're putting money into the trade, it will give you an estimation of what your liquidation price would be. So I always recommend to put a stop loss ahead of that, just ahead, especially if you're new to this, so that you don't lose 100% of a position, because there's really no reason to, because you're just going to lose 30% of that position that you put in for no reason. Like you would have been able to keep that and put it towards your next trade, but if it gets liquidated, you lose all the money in the trade. So different exchanges may allow different amounts of leverage on each coin. So for example, if we go to BTCC, you click here at the top right, it'll show cross and 50x. I'll go over this cross portion in a second, but 50x here, this is the leverage. So you have a slider here and you can pull it all the way up to 500x, which is extremely degenerate shit and probably not wise to trade at 500x unless you're putting in a really small amount, because a very small move can get your position wiped out, right? So anywhere on BTC, the best range to stick in would probably be between 50 and 100x. Anything over that, you're really opening yourself up to getting liquidated from extremely small moves, right? And this goes towards other coins as well. 500x is really high. BTCC probably offers some of the highest leverage on the main coins. Ethereum, I think you almost have up to 500x too, which is like actually insane. Yeah, you do. You have 500x on Ethereum too. So it's like, if you know how these coins move, like a 1% move, you'd make 500% on 500x, right? But if it moves 0.15%, you'll get liquidated to the other side. So it leaves you like with very little room to play with. And like I said, just different exchanges will offer more leverage. More leverage isn't always necessarily good. To continue moving on, I kind of went over this liquidation price here, and that's just the price that your trade will go to zero, right? It'll be estimated when you're before you even enter the position. I'd always, I guess, you know what? There's one thing that I'd like to add here too is maker and taker fees. I forgot to add this. Maker and taker fees are extremely important when you're placing trades. So to think about it like this, a maker fee will be lower than a taker fee. And this is if you put a limit order. So limit orders, you're adding liquidity to the market, so you're going to get less of a fee for it. For a taker, you're going to be placing a market order, higher fees, and that's like the way to look at it. You're taking liquidity away from the market because there's no resting order. There's nothing that the books can see. So you're taking liquidity away when you're doing a market order, and therefore you're going to have a higher fee. That's kind of more into the nitty gritty, but it'll actually make up like you'll see on these platforms, depending on how much leverage you're using, the higher leverage you use, the more fees will be charged to you. So if you're, say, using a $500 position at 100x, your taker fee, if you're placing a market order, could be upwards of $40. So that means that you would have to make at least 40. And if you're doing another taker order on the way out, like market selling, then you would probably have like somewhere close to $70 worth of fees. So you need to like take that into account when you're making it. It's always better to have limit orders set and execute those because you'll be paying lower fees. So just a rule of thumb, maker, you're making liquidity. So you're using a limit order, you're adding to the market's liquidity. Taker, you're taking away liquidity. It's a market order. It'll execute faster, but you will be penalized for it with fees. The last thing that is like really kind of, it's a little bit nitty gritty too, but it's definitely worth noting is that there's a fund rate on these positions, and it's something that you can see like on BTCC, or let's just look at Ethereum here at the top. If you look here, it'll show the 24-hour change, 24-hour high, 24-hour low, 24-hour volume, and then next to this is this important metric that we're kind of talking about right now. So funding rate, you can look down here. It explains it pretty well. Long and short position holders will incur fees. So if the funding rate is positive at the funding fee settlement time, long position holders will pay short position holders. If the funding rate is negative, short position holders will pay long position holders. So all that means is that there's this percentage here. This will tell you what the funding rate is. Here, it's 0.018%. And there will be a countdown. This usually goes every 8 hours, depending on exchange, but most of them are just every 8 hours. So every 8 hours, since it's positive here, long holders, so if you're holding a long position and you hold it for over 8 hours and this countdown struck 0, you would pay out 0.018% of your total position size to short orders. And that's how they kind of keep liquidity going here, is that it's very small, but if you're holding for, like, say you had a 10x or a 5x leverage position long on Ethereum, which is relatively low, so you could hold that for theoretically a long time, depending on volatility. But say you held that for a month, then every 8 hours for a month, you're paying out 0.018% funding rate. And the opposite goes with short. So you could get, say you had an Ethereum short for a month, and the funding rate was 0.018%, meaning the longs are paying you. That means every 8 hours, if you're short, you're getting almost 2% added to, or 0.018, not 2%, to your short position. So it can add up. It's not a significant amount, but it's something to keep in mind. Usually the funding rates are a little bit higher on the top coins, and that's just because people tend to hold longer on these kinds of positions. So I'm gonna stop there real quick. I'm gonna take some questions from you guys, see what you guys like. Where if I'm remember, this is just like concepts, so it's not the actual platform itself. I'll hop into that next. But if anything that I said confused you, let me know. I'll take like a minute here for you guys to ask some questions.
Like for sure, we're not like buying, for example, like Ethereum, right? It's just we're basically betting that it's gonna go up or down.
Yeah, with futures, you're placing a bet on the future price. So you're always, you're getting a position. If you wanted to get, you can buy on these platforms, just buying the coin will be referred to as spot. So here there's spot trading, and you could just buy Bitcoin, any Ethereum, Solana, whatever, through spot. But with futures, you're buying essentially contracts that you're buying into a contract that it will go up or down. So you're not holding on to the asset itself. These are all traded in pairs. So here you can see it shows Ethereum USDT. So what you're trading in is actually the USDT. So you have USDT in these trading accounts, and that's what's being placed on Ethereum. It's not, you're just using that as a solid dollar amount, and Ethereum's the asset that moves, if that makes sense.
Okay. Kind of like options trading, but with crypto.
Yeah, I mean, it is a lot like that for sure. For sure, it's a lot like futures too. If you've ever dabbled in like trading micro contracts on NQ or ES, it's a lot like that as well. Except on here, you get the added luxury of being able to use leverage. And if you do dabble in stocks, I mean, BTCC has a pretty cool like market of stocks. Like you can trade USDT pairs of a lot of commodities in stocks. So like Apple, Tesla, Amazon, Coinbase, all that stuff, gold futures, oil. You can trade tokenized versions of that as well and bet on futures. So like if you're right now, gold is a pretty popular trade. You can trade gold on up to 25. No, holy shit! You can trade gold on up to 156 leverage or 150x leverage, which is pretty crazy. If you've traded gold contracts on futures, you already know that gold is already kind of leveraged in the future market. So this can open you up to exposure through that without having to cash in your USDT or your crypto for fiat. So it's pretty cool. Yeah, Nathaniel. Yeah. So this is something that actually not a lot of exchanges have. This is why I really ride with BTCC, is because they're pretty innovative with the stuff that they have, tokenized and stuff like that. You can trade Forex through USDT on futures here with leverage too. So it all really, and they're just adding more all the time, like different stocks and everything like that. So like a few months ago, this was pretty much just like Apple and Amazon and Tesla. So now that they've got a bunch of commodities and currency trades and everything on here, you can, instead of cashing out your crypto and paying taxes on it, you move it to this wallet, and then you just trade futures through crypto, and you never have to move your money back to fiat. So pretty cool shit when it comes to the innovations on BTCC.
Do you do like long term trades, or like are we talking like short, as in like the hour?
No, you can there's totally it's totally up to your um, preference, really.
What
I
do you
mean,
do personally?
personally, I do a mix. Like I am a big scalp trader for sure. I do a lot of scalping. But for my personal account, like I will say if I wanted to, if I thought that say Bitcoin drops to like 70K in the next couple months, like all the bears are going for. If that happened, I would open up a relatively low leverage long. So I would go in with something like 5 to 10x and then let that ride.
Yeah.
So that can be a long-term position with exposure. So it'd be like if you wanted to buy at 70K, say you only had 10 grand to put it on, but you really wanted $100,000 of exposure. You could buy 10x with $10,000, and that gives you that same amount of exposure. And it's also a good way of just leveraging. I mean, most people will tell you that long-term positions you don't want to have solely in the leverage position, but it does help add to your firing power as far as smaller accounts or just even a way to um, diversify how much you're holding you know
What's what would you say is a good amount to start with?
it all really depends on what kind of portfolio you have. Like if your meme portfolio's 5,000, then I'd recommend maybe throwing in $500. You know what I mean? Put in 10% of whatever you're using and then get a feel for it. Because like anything, this is going to be a learning curve, and you're probably going to have to pay, some money towards that education when it comes to that. But hope that's what I'm here to hopefully curve a little bit. Hopefully,
Yeah, yeah.
with me there, you're not taking such expensive lessons. You know, so it really all depends on risk tolerance and what you really, say you put in that 500 and you're feeling it, you like how it works, and you're starting to get a hang of it, then you put in a cup like another 1,000 or a couple thousand and keep you, you know, so you can open up multiple positions at once. You know, it really just depends on personal preference at that point.
Thank you.
Anytime, anytime. Yeah, feel free to ask anything you want, guys. That's what I'm here for. That's what Harry's got me in here for. I've been doing this personally. I started off. I guess I didn't really do a proper intro at the beginning, but I'm about 7 years in full time day trading now. I'm 29 years old. I have a background in stock options, predominantly. Stock options was my kind of intro to trading, just before, like a couple years before COVID, and then I really got serious with it in COVID because I ended up kind of getting laid off from my job and never looked back. So I started up with perps trading about 2 years ago now, and since then, probably 8 months into my leverage trading career, I started predominantly trading perps. Like this is pretty much my main source of income is trading leveraged tokens and coins, right? That's been my bread and butter. I've kind of left the stock world and more dove into here. For me personally, and I think you guys will see too, it's a really good way to, like say a lot of people are working 9 to 5, they can't trade the stock market during open hours. Like, and they have jobs that just don't allow them to. They can't be constantly checking charts, they can't be constantly checking price. So this is great because it's 24/7, it never closes. Crypto is always volatile, there's always opportunity, even in bear markets. Some would argue there's more opportunity in bear markets because, I mean, like you can short whatever pop you see and you're gonna do pretty well sometime, most of the time. So this is a great way if you're kind of feeling stuck.
What time frames are you sort of looking at
Pardon?
yourself?
Sorry? Say again?
What time frame are you sort of looking at yourself personally?
Personally, I do a lot of multi-time frame analysis. So as I get more into the chat, you'll see I'll be posting more into my chart analysis channel here that we have created, and it all depends on the purpose of the trade. Like a short-term trade, I'll usually look at the 3, the 5, the 15, and the hourly. and sometimes the 4 hour, just so I have an idea of the structure currently. Um, but and that'd be like short scalp trades, stuff like that. Sometimes I'll bring it to once I'm in the trade, I'll take a look at the 1 minute just to give myself anxiety. And uh, like it's pretty much it's those 3, 5, and 15 are my personal favorite for trading scalping. When it comes to longer term outlook and trades like that, I'll go usually the 4 hour, the daily, and the weekly. That's usually the best way to look at it. I've really simplified over the last few years. I've tried fucking everything. I feel like that's what you kind of get put through, especially if you go on like X and all these forums on Reddit and shit like that. You'll have a ton of people telling you this is the strategy. Like you need to trade like this. You need to be using fibs. You need to be using fair value gaps and ICT methods, and you need to be able to recognize patterns that you like trading and setups that you like. All this really comes down to, all real profitable traders will tell you that most of that shit is bullshit, and really all you need to understand is candlesticks, understanding, weak looking patterns and pattern recognition. That's all it ends up becoming, is just understanding patterns. So I've kind of put a less of emphasis on indicators and stuff like that, and more of a overall look at, like, if you can just recognize support and resistance, then you can make a living doing this. And that's just the facts. Like, anyone who tells you that it needs to be more complicated than that is selling you, a bill of false goods, because they're just trying to sell their proprietary strategy that no one in the 150-year history of trading assets has thought of other than them. You know what I mean? It's usually bullshit. So I'll never sell you guys on an indicator or anything stupid like that, because personally I just don't believe in it. I believe in, pattern recognition and understanding market momentum. Momentum and recognition are the two most important things.
That's awesome, man. That's like a relief for me, because when I was getting into it and I'm like, doing like just basic research, there's so many indicators, so many like strategies that I was getting overwhelmed.
Yeah.
And I was like, I just can't, like, how is everyone trying to teach a different type of strategy, and like people lose and people win? It's like it was just getting so confusing. And what you're saying just makes total sense.
Yeah. Honestly, bro, like I'll tell you that it like 100% how it is. I've seen how the markets change. I've seen how the space around all of this has changed. On like, you see these guys like TJR and like these crypto influencers that sell like $1,000, $2,000 courses and all this shit. The only real like benefit of those groups is the group itself. Like it's the community aspect. It's the ability to share talking points, get a feel for other people's, like, what they're seeing, and that's really it. Like, I'm sure you'll find some good voices and good traders who mean well. I can't like sit here and just be like, I'm the only trader that like has has your best interests for you, because there's definitely good people out there, but the majority are dog shit. And it's something that and they're just selling they're selling shovels in a gold rush is really most of it, because there's so many new people to, like, if you look at the statistics and the data, there's so many new people hopping onto like 0DT options, trading crypto, trading prediction markets and stuff like that. The people who are really making the money here are the people selling the courses on how to do it. It's not, if you look at the data, like, most people aren't profitable in this. So you always have to be extremely skeptical of who you trust and who you take advice from, because most of these guys are just trying to squeeze as much out of everybody as possible. I'm a little off topic here, but like, yeah, I recommend just finding things that work for you, and hopefully I can help you with that. Like, I'm never going to tell you guys in chat, oh, you see that, that's bullshit. I think it's a long opportunity here and you think it's a short. This is why you're wrong and I'm right. I'll back up my thesis with different points, but I'm not going to sit here and say that, one person's look or thesis on it is 100% wrong compared to mine. That's just You know, that kind of bias is what usually kills people in trading. If you're not open to look at, I think the best traders will enter a long and then break it down in their head why the short could be a thing too, like why this could be a short look as well. So you kind of, you have to look at the opposite side of your thesis a lot too. Because if you're only like, no, this is going up and there's no way that it doesn't go up and there's no reason it shouldn't go up while you're short, then that's the perfect time for it to go up, because you just have overlooked that kind of look. Um, Sorry, when I get talking about this kind of stuff, I get kind of ranty. Um, Here,
No, it's good.
I'm just
It's
gonna.
good.
Okay.
You can tell you're passionate about it.
Oh yeah. I mean, yeah. Sometimes I'm a little bit. Sometimes I catch myself. I'm like, dude, chill out. These guys, But yeah, super passionate about this. I mean, it's all I do, right? So, I'm gonna show you. This is a brand new account, so it's kind of perfect. How to deposit real quick. I'm gonna show you guys how to deposit from a crypto address through BTCC, but it'll be the same compared to other exchanges as well. And then I'll show you guys how to place a trade real quick to cap it off. Just to keep this pretty basic, I've already kind of gone longer than I wanted to because I don't want to lose any of you guys, make it a little bit too confusing. But okay, so I went to the top deposit. You choose your crypto. I'm guessing that most of you guys have a wallet that you're using from Phantom or something like that. So this would be that process as well. I'm going to do it from another exchange, but another wallet works just as well. So I choose
Quick
my.
question.
Oh yeah, what's up?
Sorry. Do you, because like right now, whenever I'm like depositing into, like for example, I deposited, I put like buy on Coinbase, right, and then I transferred over to my other wallet, right?
Yeah.
So with Axiom or whatever. Do you have a main exchange that you like to use that doesn't have as many fees or anything like that when you're purchasing on like a Coinbase or whatever? Yeah.
Okay, for me, I always kind of have shitty advice for people with this because I'm Canadian. So for me, I use an app. Yeah, so it's like I don't have the same. Most people are that I teach and I trade with are from the States, so I can't really give a solid
That's
opinion
fair.
on that because I use something that's like it's called Newton, and it allows me to transfer money right from my bank account. It's got a pretty decent spread on, like, say if I'm buying from a dollar to a USDT, like the spread is usually really low. I pay low fees on being able to buy that. I guess it probably just takes some. Probably should do more research on the US and what platforms allow. I think notoriously Coinbase doesn't have the best fee structure.
Yeah.
So maybe it would be worth it to go take a look at another wallet or exchange where you could directly hook it up to, say, a debit card or something like that, and be able to buy it and see what the lowest fees are. I'm sure I could ask ChatGPT right now and it would let me know what the top.
Yeah, I'll do my own little research on that. Thank you. I just wanted to just get your feeling on that. Yeah, thank you.
Anytime. Yeah, I'm sorry about that. As a Canadian, I'm saying sorry as a Canadian, and then my advice for that kind of shit is not the best. So,
That's all good.
my personal favorite. I usually use Solana as my network, just because it's fast and the fees are usually similar, if not lower than the rest of the networks. And then it'll give you your deposit address, right? So I'll hit copy. Just for the example here, I'm using my second account on Blowfin that's got like $9 in it. So I'm just gonna transfer this $9 over. So this is what it would look like if you were starting on Blowfin. I know somebody said that they had a Blowfin account. So if you're transferring Blowfin or whatever, you go up to your assets, deposit or withdrawal. Sorry. And select a crypto, so USDT. Paste your wallet address from BTCC like that if you're depositing on BTCC, and then click Solana. I'm just going to transfer the whole thing, and it shows as if the fee is 80 cents. I'm gonna hit withdrawal, continue. For me, I've got to do. Oh, okay, well, give me a second here. I'm probably gonna. Shit. trying to think about how to do this without putting all my information on the screen for you guys. Okay. Oh, okay. This is.
Stop sharing. Just stop sharing the screen.
Yeah, I might. The problem is I'm recording too.
Oh, I see.
Yeah. Okay. Well, you know what? You can see it here. This is I have 3-step verification on mine, so I use an authenticator, my email, and my phone number. And then once I put all that information in, I hit continue. It'll just withdraw it, right? And then it would be in your wallet over on BTCC, and it would be within your assets. And USD, if you're transferring over USDT, you'll be able to transfer that into your futures trading account, and that will be readily available to trade. If not, you could always go to, like, say you sent over Solana, you just convert the Solana into USDT here. You can convert whatever, and there'll probably be a small fee for the conversion. So normally I'd recommend just sending over USDT to these platforms if possible. I'll show you guys how to place a trade. Instead of doing the transfer, now that I showed you that, I'll just do, I'll place a trade on Blofin, so you guys can see how that works as well. Here, you know what? I'm just gonna go to my assets, transfer, because I've my USD. Is this in my futures account? This is where it can get confusing. So funding is just like your wallet. Spot is where you just buy like coin by itself. Futures is where you want it if you're trading futures. So you'd go transfer from funding to USDTM, which would be the futures. So it's like the $9 there. And then you go over here. So there's USDM and USDC futures. Here you click USDT because you're using USDT as your backing. And then here you'll see it says available. It's at $8.89 US, right? So I'm probably saying this a little bit too late, but a key thing to do here when you're placing trades and you don't want to, like, say you put in this $9. Let's just say, so here's a slider and this is how much of that $9 I want to put in. So if it was like, say I had 100 in here and I put it to 10%, then it would put $10 in the trade. So here, I mean, I've got $8, so I'm just going to put the full $8. You select your leverage. So here I've got it on 100x for long. On short, I had it on 150 because I guess I was feeling extremely degenerate last time I used this account, and probably why I have no money in there anymore. But the 889, right, is fully available to place on this trade. So you can do a limit order, like I was saying before, so you have a little lower fee. So let's see, we're at 92,339 right now. So what you can do is you can add a trade right on the screen here if you want. You can put a new limit order and put 100% and limit long. So then here, if this price reaches here on this green line, you can put a long. So normally I'd probably put it closer to where these wicks were, where previous support was. But I just kind of want this to execute so you guys can see. So I'm going to put this up a little bit. Insufficient mark. Oh, well. Shit. I might. Sorry. I'm going to just place it here. Replace this. So I hit that little plus. New limit order. 100%. I'm just going to limit short. So if that triggers, I've got an open order here. I think that might not be showing on the screen. So it shows this open order, right? And it just executed. So you can see order filled. And now I'm in. So I'm short BTC at 100x leverage for that $8 in margin, and it's on isolated. So here in the top, you'll see there's isolated and there's cross. Cross means that you could go more than negative 100%. I'm going to just throw it out there now. Everybody, always when you go on a new exchange, you're going to see the margin mode. Switch it to isolated so that you can only lose the money that you put in that trade. You know, some people will think, okay, maybe it allows you to, you know, fuck up a little bit. But if you're minus 100% on a trade, it was a bad entry. So there's no point. I know I've seen people sit there and like minus 150% trades. It's like at that point it's pulling money out of the rest of your account instead of there. So you're always better off just keeping it on
That's
isolated.
smart. I never thought of it like that.
Yeah, it's. I mean, it all depends on what kind of trader and what kind of risk tolerance you have, right? Like I know people who have like 700K to $1 million accounts, $2 million accounts, and they'll go on cross because if they enter a 100K position, they have a little bit more risk tolerance, and if it goes negative 100%, they don't want to lose the $100,000. They it sounds stupid, but they'd rather lose more than $100,000, so it gives them wiggle room to get back up into the positive again. And it's kind of a psychotic strategy, but I guess to each his own. I don't recommend it. So here, you're just for some chart knowledge, you're gonna see, like I said, here you're gonna see. I'll probably scroll down a little bit so it's on the screen. Your estimated liquidation price is mine is 92,975, which is super tight because I'm at 100x leverage, right? So the higher your leverage is, the closer it is gonna be for you to get screwed out of the trade. So it'll show you here on the screen on Blowfin, it shows your estimated liquidity price. And what I would recommend doing is you can go over here on the app. It's a little bit different and kind of easier when you're placing a trade, but you just add your stop loss. Oh, if I could move this over. Okay, here we go. You can add your stop loss and your take profit. So here my liquidation price, this is $8, is that 92,975. So I'd put it at 92,950. So I'll lose the $5, but I won't lose the whole 9. And then you can put your take profit in. Let's say I wanted it to be at 92K. I was shooting for 92,000. Profit would be $3.47. That probably wouldn't even cover the fees. But now you can see how this would be on screen. So it'll show you your stop loss, your estimated liquidity price, your entry, and your take profit all here. So you can see everything right there. And your realized P&L update in real time. And that's how you just place a basic trade, right? So this is a 100x short. It would be the same way if you were placing Ethereum long or Solana long or anything like that. So you get a idea. It'll even show you here, like, this is what I'm risking. This is what I'm making. Not a great R&R trade. Should probably have this like much lower. But yeah, that's the basics right there. That's how to place a trade, how to deposit, just some fundamentals. I'm going to cut it here because I don't want the recording to be too long for anybody who missed this and they see it and they're like, fuck, this is an hour long. So that's the basics. I'm going to stop it here.